Hey folks, welcome to Friday, the 10th of December 2021. It's been a bit of a quiet week, really. I think the biggest draw of the week is today. We get the US core CPI and CPI figures coming up just around in an hour and 15 minutes, half one GMT. This should be pretty volatile for the whole space, really, on equities and potentially on energy now. So let's kind of keep it together until then. But what we've seen really yesterday was a sort of a nice inflection coming in on equities after the open. Certainly on the Dow, didn't really see it transpire on the SPOs or the Nasdaq. If anything, we saw down quite hard on the Nasdaq, and oil just kind of coming off the 100 EMA quite a bit. Getting over to the charts, let's talk about oil here. Sorry, we'll just get oil up on the daily chart. You can see here, we've been down into the 200 EMA, rattling out on the 65 63s. This is a really good area of support down here, looking at some higher time frame stuff. But sure enough, we've lifted up out of those 65 63s. We're holding on this sort of uptrend since the, put in on the low of the 2nd of November last year, confluent then with the low 20th of August this year. And this is the trend that we have in black as below. And you can see the low of day currently sustained by that upward trend, which has been coming into play. As far back as last Tuesday, or sorry, that's Tuesday. Sorry, that's Tuesday. Last week. Is that Thursday? Oh no, it's Tuesday this week here at this point. So nice action on oil. I don't really believe that any of this downside felt yesterday. It's been pegged to Omicron, blah, blah, blah. But really, technically, we are still going up in this market and well sustained. I think we're going to make an assault on 73.98 today for oil. Getting in long on that, a retest on the trend, just 70.44s thereabouts today. A breakdown on this trend is going to be quite terrible for oil prices. And we're definitely going to have to come back then and pick up some buyers all the way down here, 65.70s. I just don't see significant support until we get back down to there. Should we break around this 70.50s area on the trend? All right, that's energy. Looking over at US equities, Nasdaq. How has she traded? You see yesterday this area. I've highlighted this area. We're going to talk about this evening on the closing bell chat that we're doing at 4 o'clock every Friday. So now that I'm back from my travels, I can get back into that. So yeah, I took note of this really yesterday. We came down to the bottom of the prior day's Asia Pac range, and then bid all the way up to the top, and then just started to go off again. Return back to it here at about the half three marker, half three candle, and then we sold off down towards the 20 EMA for the rest of the session. So for me, it's a little bit toppy on the Nasdaq. You're looking at here on the daily bars. It doesn't really look that awful at all, really. I mean, we are certainly opening down here towards the 20 EMA. I think the market's looking kind of punchy for further upside. 16,448 and a half target ad there. I think we could actually, let's see what we get on the CPI figures and how the market digests that today. We do have sort of a tightening Fed, even bringing their timeline forward for interest rates, interest rate hikes. So really, I want to see how this market wants to digest these inflation figures and whatnot before we look at anything. But certainly we have the 16,000 handle below. I think it is at one point going to bring in decent support, as it has done in the past. Here on the daily chart, you can see that 16,000 coming in. So quite complicated here on the Nasdaq chart, but I think the 16,000 should come into play between S1 and S2 today. Obviously, the 20 EMA there as well. What's the trade? Yeah, I like the long 16,000 to be honest. That's what I'm looking at on the Nasdaq, notwithstanding uh, probably Elon Musk, putting the dampeners on everything with God knows what he could come out with today. But I think CPI figures are going to be in the driving seat, yeah, for these markets. You see here the SPOOs on the daily chart on the left of the screen. Um, yeah, I mean the 46.69 and a quarter has held up very well over the APAC session here. Um, I wouldn't want to be betting against that figure, putting in further support and holding us into what will be just trading above 47.11s. And I think once we get over 47.11s, there is absolutely nothing there to stop us pushing through the all-time high on the SPOOs, and why not? The Fed is accommodative. Omicron, if anything, is going to provide for the Fed to be even more accommodative for longer. I don't know if they want to start talking about more tightening scheduling in the face of a resurgent virus at this moment with a new strain. So, look, we're going up. We're going up in these markets, and I don't see why we wouldn't, notwithstanding headline risk. Dow, really nice action on the Dow there last night, coming out of the lows of day. On the open, coming out of the European lows, up into the 35,777s. You see that a bit of a doji at this point, and then the market wanted more before just coming back to finish out the session quite high up. So maintaining the pivot on the longs, holding above 35,777s. We have to trade 35,900s, as I said at the start of the week, coming into also kind of a double top area here from Wednesday. The all-time high is quite far away for the Dow, 36,446. To give you an idea of how far away that is, it's about 1.6%. And that's completely doable for the Dow, completely doable in one session. So something to note from yesterday, and we will talk about this in the closing bell tonight, is that you did see that maintenance of quality across the equities picture yesterday. What I mean is like, I talked about it. It's like old money versus new money. Old money is Dow, those big, sophisticated companies, dividend payers, really big book value, solid, solid, solid. Whereas Nasdaq is like the dirty cousin, and a lot of companies on valuations of 10 to 20 years forward earnings, EBITDA, and a lot of them don't have revenue. So less stable, less dividend paying, less quality, and so you did see that divergence yesterday. Dow up, Nasdaq down, and then the SPOOs kind of caught in the middle. So I see that continuation of value in these overall U.S. equities as we come into the close on the year. The dollar, late surge on the dollar yesterday. You know what? I don't know why we had that surge in the dollar. I'm sure I could go back and figure it out. In fact, one of the pro traders could probably let me know. But yeah, I mean the really essentially. Euro came back to the 150s here, and we were looking to see if the support would come in. It did not, and you could see that longs over that area really were just not interesting, and you're not getting paid out really anything for holding that overnight. In fact, you're at a deficit now, stopped out hopefully. So I think we do need to come back on down at least to this trends channel that we have on Euro to find the buyers. Now this is the sort of actually we have rolled this contract so far, so just this channel needs to be updated to that there. We'll do this one and we'll just copy and that over to find our bull flag. All right, so here's the new shape of the bull flag. Yeah, I think, look, if we trade 121.25s, I think that's a buy there for sure. I don't know if we're going to trade that low today on the euro. major support coming in 11,775s, and I don't think we're going to trade these levels today at all. Something for next week should the dollar upside pressure continue. But for me, I don't think it's a red letter day for the euro at this time. So that's about it, really. We'll check in on Nat Gas just before I go. We had just a smidge of a build up on expectations yesterday, or sorry, a smidge of an additional drawdown, I should say, um, providing a little bit of a bid into Nat Gas. Now, what you have to be aware of here in Nat Gas is essentially um, there is a mega gap here. I'm gonna actually delete the gap off the 60 minutes, and I'll show you this gap taken from the prior close. Just let me get this on here. The prior close, to where we reopened on trade. There's the gap, right in yellow. You can see on your screen, both on the 60 minutes here on your left of screen and the daily bar chart here on the right. We are holding inside of the gap. We are holding, though, below this mega uptrend. I know this is all very technical, but this is how I trade. It's technical, technical, technical. I really don't put too much in fundamentals, but well, you need to understand the fundamental picture in order to then execute technically right. So I think we're going up. Basically, I think we spent far too long down at these suppressed prices. You're seeing the European gas contracts back on the bid now that we have Joe Biden threatening to essentially scutter the entire Nord Stream 2 pipeline project if Russia invade Ukraine, right? So, Hunter Biden, I'm sure he's probably in the mix there somewhere, but who knows? But either which way, I think there's now risk back on the table in the face of Russian kind of war games, if you like, and that is a direct threat to supply for nat gas. Thus, if you have that situation between Russia and Europe, you're then going to have Europeans buying more Henry Hub nat gas, which is the contract you're looking at right now on your screens. We're trading the F22 product, which is the F is Jan 2022. We're no longer trading the Z 2021. So do be mindful of that with the contracts you're trading if you are trading on the futures rather than spread betting. All right, that's definitely it for me for this session. It's a sunny day here in Dublin, and now looking forward to a nice weekend running into Christmas. If you haven't clicked to subscribe on YouTube, please do down below and get informed of when we go live for some of our Fed events and whatnot. Otherwise, have a fantastic weekend, and I'm going to see you all on Monday morning. All right, be good.